Hey, hey everyone, welcome back to our news trading session. And obviously tonight it's going to be our non-farm payrolls. Again, we are in a very unique situation, so I don't know how huge the impact is on for the NFP is onto the market. But yeah, let me know if audio is coming through okay. Should be coming through fine. Okay, audio is good on my side, and we can get started. So yeah. Welcome to news trading session number 1, and this is Non-Farm Payroll. My name is Vida Jodo. Let's get started with a quick disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility, and market reaction to can be swift and very unpredictable. Which is probably something that we're going to be looking at tonight. Again, I don't know whether it's actually going to move the market or not, but hopefully it does. Which leads to our trading risk and delays in order executions. So be very attentive when determining the volume of your transactions and consider all possible risk factors. And yeah, just before we begin, normally we would straddle the market, but I don't think we can actually straddle the market today. So we'll do a little bit more on the post data reaction to news before I'll give a trade, and we'll see what happens. There's already a couple of trades running. In fact, market's already started to move right now. Might see a little bit of a reversal from the current move in the market, but we'll see what happens. Especially in the currency market, we don't see a lot of range happening in the market. All right. As usual, I'm going to show you the bonus code if you guys need it to double your deposit bonus, and you should already have access to the private Telegram channel if you have attended the previous sessions before. If not, please do contact customer service and they'll be more than happy to share with you the Telegram link. Okay, this is the code. It's Nonfarm 2025. Again, you can save the code. It's valid until the 31st of December 2025. So, you got how many more months? 12, 8? Yeah, about 8 months for you to use the code, but yeah. The code again is it's Nonfarm 2025. All right, so a little bit about myself. My name is Vida Jodo, for those that are new or have not attended my sessions before. And I've been a full-time trader with over 20 years of experience. In fact, it's 23 years, and I've been in the industry itself, working in the industry as a professional technical analyst and coach. That was since 2007 for several, huge global brokers out there. But yeah, currently I do run my own company and more or less an independent at this point in time. And yeah, my expertise is in Ichimoku Kinko Hyo techniques, which is a Japanese charting techniques. And I've been invited as a guest speaker at Trading Investing Expo across Australia, as well as Invest Fair in Singapore, and the ATA, as well as the APTA conferences, which is Australian Technical Analysts Associations. Okay, so I'm going to, we need to go through some theories, because the last session that we did last month, we didn't quite get to a lot of the theories, and partly because we were dealing with, a lot of stuff in April, and yeah. But anyway, let's do some theories first, and I'll try to compress this into maybe 10 minutes or so, because I need to, show you the market and consider what we need to take a look at. But yeah, data that we're looking at, the labor data, which is what we would call it, which is the set of data that's going to be released tonight. It's actually released by the BLS, which is the Bureau of Labor Statistics, and they do collect this data, and they do actually publish a lot of the data out there. But yeah, every year they kind of publish a calendar, so we know the release date for the entire year. They'll be releasing the inflation number as well, and we'll be trading that live. It's not going to be next week though. Inflation number is actually going to be on the 13th. So yeah, we actually have a pretty quiet week next week. But yeah, on the 13th, we'll be doing the CPI numbers. So labor data that we're looking at, it's usually published every first Friday of the month, and today is obviously being the first Friday of the month. We'll have that numbers, and reason why I'm not, we're looking at last month, and I think last month we did mention that it shouldn't have a lot of impact in the market, because a lot of the focus It's not currently on the labor data itself. Is it important? Yes, I think it's very important, especially if we get a huge miss on the data. If the number is super weak, then yeah, we'll get that. But right now, I'm not really sure whether or not it's actually going to create a lot of impact. So that's one of the reasons why we're actually not straddling the market tonight. I do want to see the readout first, and then we'll base our decision on that, and at the same time look at the technicals and see how things are. All right, so the NFE, it's obviously it's a monthly report, very important. It's basically just the number of jobs added or lost in the U.S. economy, excluding farm-related jobs. This would include private household employment as well as nonprofit organizations. So, if we take a look at the whole tariff situation here, if the farming industries, what would farming industries include, right? So if anyone is producing soybean that works as a farmer, or maybe as a cattle farmer, they're not going to be part of the NFE numbers. So this is one thing that we need to look at in terms of how the whole tariff things is going to have a lot of impact. You might not know this, but there's a lot of agricultural exports in America, and with the whole tariff situation, if other countries are not importing from the U.S., and obviously this is kind of the numbers that would add up into the unemployment rate, but it wouldn't show up on the NFE numbers because the NFE numbers excludes those farm-related jobs. Okay, but yeah, typically we're going to be looking at 200,000 as kind of positive sign of a healthy job market. If we have an addition above 200,000, then yeah, I think it's good. But again, if we take a look at the interpretation of the NFE data itself, it can vary depending on different economic factors and the context it is released in. So I want to explain a little bit here in terms of the context that we're looking at. I just gave you the context basically in terms of those non-farm related jobs. It doesn't really account onto the whole bigger picture if the tariff actually has a negative impact onto the U.S. economy there at this point in time. Okay. So is it important? Of course, it's important because it's going to move the market a lot. Usually, right? Last month we didn't see a lot of movement. In fact, we get no movement at all. I don't think it was actually tradable last month. We didn't see the market goes out of the range. I think there was only one trade, but that was a very super profitable trade. I believe we actually got it on the inflation number there. Picked up gold at a very low level. So low as in how low are we talking about? I think it was actually it was less than 3,000 when we picked it up, if I'm not wrong. But yeah, you can take a look at it. You can review the trade that happens on the 10th last month. But there was only one trade that was given, and that was gold. So if you guys managed to hold on to that and get out at the very top, then congratulations, you really made a lot of money. And even if you didn't get out at the very top, you are actually still in profit anyway. This one in time compared to the 10th of April trade. But yeah, NFE does impact a lot of the currencies out there. Obviously, major currencies, and I think the US dollar is going to be impacted. We are looking at a little bit of a correlation coming back into the US dollar at this point in time. So, hopefully we do see the market react to it. But we have been looking at market reactions throughout the whole day today. Not really in a huge kind of range or anything like that. I think if you take a look at the currency market last month, it kind of just died down. The past 3 weeks, the volume is pretty much gone, and Euro USD to Pound USD is pretty much all ranging at this point in time. And obviously gold, you saw that pullback on gold as well. And one of the main reason why gold was pulling back down was the whole de-escalation of the trade wars at this point in time, with Trump just walking back with whatever he said. And obviously we have conflicting views or comments coming up from the US saying had they made a call to China and whatnot. So I think at this point in time, I'll be honest with you, a lot of traders out there is very much desensitized to what Trump is saying. Basically, everyone in the world is just thinking this is just a clown, and it's not even worth listening to whatever he wants to say. Okay, all right. So that's the context, and reason why the non-farm payroll is important because the number itself, like the non-farm employee classifications accounts for 80% of the GDP, and we had that negative GDP numbers last week. Sorry, it wasn't last week. It was actually 2 days ago. We had a negative GDP numbers, and yeah, this is pretty much a guarantee that next quarter could be a potential recession. So we'll see. It was at negative 0.3% on the GDP numbers. Just a little bit of an update for you guys as well. All right. The other set of data, I think this is actually very important tonight, and this is something that we want to focus on tonight a lot more than the NFE is actually the unemployment rate. So the unemployment rate represents a proportion of the labor force that is currently not employed but is capable of being employed. And the U.S. unemployment rate is determined through a survey of approximately 60,000 households. And for you to actually be counted as part of the numbers here, you basically need to do your, unemployment claims, and that's the reason why we look at the unemployment claims numbers every single week. Number one, obviously they have to meet the following criteria: that they have to be without a job, they must be actively looking for a job in the past 4 weeks, and they must be available to start a job if offered one. Now, who's offering this number? So obviously this is part of the requirement if you are going to claim your unemployment claims benefit. That you have to go to a center, you tell them that, hey, I'm unemployed, help me look for work. And if they find a job and, you go for the interview, they offer you the job, you have to take it. And these are the numbers of, basically the criteria for anyone that's going to meet the criteria to be calculated as unemployment rate, right? So obviously they came in, they tell the center, hey, I don't have a job. Center helped them look for a job, and maybe they didn't get the job or any offers in that 1 month, and that becomes the number for the unemployment rate. But again, it's only taken from a 60,000 households consensus, so it's not really a huge number, but it's always been like that, and that's basically what we're going to be looking at for. Okay. The other thing is average hourly earnings. I don't think this is actually going to be important at this point in time. We got 3 sets of data. Oftentimes when the market is in a normal market condition, then we would be looking at average hourly earnings as well, as a consideration on top of the NFE as well as the unemployment rate. But tonight's focus it's basically just going to be on the unemployment rate at this point in time. But if you guys want to know what the average hourly earnings is, it's basically just the average minimum wage of people, how much people are getting paid in the US. Does it go up or does it go down? But typically we are looking at a monthly gain of 0.3%, and I think that's about right. Average hourly earnings is actually used to measure potential inflationary pressures, because if you are earning more, then obviously you are expected to spend more, and this is just human psyche, is that people, I don't know. I mean, it's country dependent, right? If you're in the Asian countries, then it's going to be completely different. But even amongst Asian countries, it's not going to be that equal as well, because I think there's a lot more people that thought, hey, I got the money, I better spend it now rather than save it. But if we deal with Western countries, that's basically their mindset. But the current generation shift, right? I'm not sure if you guys are one of them, but comparing to my generation, I might look like this, but I'm actually pretty old. And the younger generations, they have a different mindset. In fact, the current generations are acting a lot more in line with people that are maybe in the 20s that causes a Great Depression, where everything is pay later, pay later, pay later, right? You saw the financial industries now. Everything is like, hey, just grab this, you can pay that back later on and whatnot. So it's just creating a more or less a debt economy at this point in time. So yeah, the average hourly earnings is basically just going to be that kind of indication. So if people are earning more, they're likely going to be spending more, and then that's going to push up inflation, which is obviously a concern with the whole tariff issues right now here. And yeah, I do want to give you guys a little bit of a context into what is going on right now. We have a couple of issues, and this is the issues that I'm really more concerned rather than having to hear Trump say this, say that. So basically, America wants to put a 10% tariff on everyone in the world, right? And obviously, if you read the news this week, they've been telling people that a deal is coming. There's going to be one that's going to be signed. A lot of people thought it was actually India. I don't know how they do it, but it was actually Ukraine. But Ukraine's deal wasn't really more about that tariff thing. I think it's more on Ukraine asking for military support. Now, the Japanese deal fell through. Nothing got done, and I think if you saw the report today, if you read any news, is that Japan is basically saying this, like America wants 10% tariff, they want a reciprocal tariff, they'll get rid of the reciprocal tariff, and then they'll play it in a way that, hey, you know what, I cut off your reciprocal tariff, I only give you 10% tariff. I think that's a good deal. And I think the US is basically saying to the whole world that, they're really very kind, that they're just going to give us, everyone else in the world, a 10% tariff, which is, BS at this point in time. Right, but it is what it is. So inflation is a concern because if tariffs goes up, the longer term implication is that the inflation could go up. Now, I know the FOMC has put on a term where they say it's transitory. We should be talking about this next week, but before that, I'll just give you the context because we don't have the CPI until the 13th, so you guys get a good picture of what's going on. But yeah. If tariff gets implemented, it will push cost of goods higher, which is going to drive the CPI higher. So we got short-term inflation, but the long-term inflation and the impact that I'm really more concerned is with the logistics. And the logistics is their shipments from China, Korea has been stopped, and factories are basically just shutting down in China at this point in time. That's probably why you see the oil prices kind of crash down in the current situation. And if basically, let me just give you an example here. If a company in the US is asking, for example, maybe it's probably not Nike, but let's say it's Apple, right? They say, hey, can you do an iPhone 16 for me? And factories in China is probably going to say, okay, yeah, sure, but it takes time, right, to meet their orders and whatnot, and for it to get delivered, including logistics, it could be 5 to 6 months. So if they stop everything right now, no orders are coming through. I'm just giving this as an example, but we're really talking more about other things, maybe like the cheaper stuff like toys and whatnot, plastic molding and stuff. So you got stopped, no shipments coming through, and once the whole tariff situation is done, if it's positive at all, and everyone just resumes trade, it will actually create another bottleneck, which is one of the conditions that we have that causes inflation to spike up post-COVID. So, you want to put it in a similar boat? Yeah. Is it as extreme as that? Probably not, but very similar situation. All right, so we got NFP trading strategies. I'm going to run through this very quickly, and so I think I spent too much time talking about the context of stuff. But yeah, we can do pre-NFP, right? You can trade before the NFP. If you do so, you got a position right now, please get out, because you're going to get a lot of slippage. You're going to get a lot of liquidity drying up as well. So, something that for you guys to consider as well, that, you should consider closing a position if your trades are, before the NFE numbers. But yeah, the other thing that we normally do is the sell stop and the buy stop strategy. It's not going to be something that we're going to be doing tonight, so we are going to skip this very quickly. What we're going to be focusing on tonight is actually we are going to fade, and I think we will have the opportunity to fade. In fact, I'll do something very different today, which is not really typically things that I will do. right? But we might actually have to scalp the market because the range it's pretty ridiculous as well. And I'll give you a post NFP trade, a couple of stop losses and take profit levels as well. So we'll do this two tonight, which is number 3 and number 4. We'll fade the initial release, and because I really want to process what the numbers are. So these are the expected numbers here. The NFP numbers previously was 228,000. This was a huge jump. I think it was 100,000 above the market consensus. And consensus right now is for a gain of 130,000 to 140,000. I think this is about okay. I think we should get a number below 150,000. But if we do get 150,000, doesn't necessarily mean that it's a super good thing. Now, the focus tonight is obviously the unemployment rate. And the consensus for unemployment rate, I think about 70% of the consensus that we have here is at 4.2%. We're not expecting any changes here. If the number comes in at 4.5, then yeah, we will actually see a potential rate cut this month by the FOMC. Now, the market again, let me just say this, the whole thing with the FOMC is that the market is being stupid again, okay? I think with the whole GDP numbers 2 days ago, instead of market being realistic and start thinking with their brain for once, that, hey, we have a negative GDP before tariff was actually implemented. And the reason why I say all these numbers are probably not going to be important is because these are data that's kind of irrelevant, right? So that we have a little bit of a rally in the stock market, and everyone's looking at earnings. All these earnings are Q1 earnings. It's not really Q2 earnings, which is really important because the tariff is going to impact Q2 and Q3 earnings, right? So, negative GDP for the first quarter, I don't think that's something that we should look at in a positive way, but everyone is looking at that and say, yeah, it's bad. And because it's bad, they're really expecting the FOMC to, cut interest rates by 4 times this year. So the expectation of a rate cut has basically just shot up to 100 basis points in the past 2 days, which I think is stupid and unrealistic. I don't think that we're going to be looking at that situation there. And I think the FOMC is not that dumb to cut interest rates when there's a high potential risk of inflation coming into the market this year. So I'm still sticking to 1 or 2 rate cuts at best. And, once the whole thing calms down a little bit, we'll see what the underlying movement is on the market. Yeah, unless we have that unemployment rate suddenly shooting up to 4.5%, then yeah, the FOMC will have to cut very quickly. But it kind of creates a little bit of a scenario where there might be a potential stagflation. Okay, our average hourly earnings not that important at this point in time. Okay, so this is the numbers that we have here. Obviously, we do have a little bit of a range, but I do not want to straddle this, and I don't think it's worth straddling at this point in time. We're not really in that flat range bar market condition in all honesty, because this is really more there's a downward pressure on the sterling at this point in time. So if you take a look at it on the hourly time frame, unless you say oh yeah, I'm looking at it on a much bigger time scale, we're going to be looking at this range here, then yeah, it would actually play into the daily time frame where we actually do have that order block up there. But we are actually currently below that order block. We're already gone past that order block. So there's no range that we can actually straddle. And because of that, I'll just get rid of it because it's kind of pointless. The Euro USD, same thing as well. We're more or less in a channel rather than anything else at this point in time. If you take a look at the current situation here, this is on the 15-minute time frame. That channel is replicated on the hourly time frame as well. It doesn't fall into a flag pattern. It doesn't fall into an ascending channel or anything like that. It's just, yeah, we have a little bit of a bullish channel that's on the hourly time frame. Now, if nothing gets broken, then everything is just going to stay in that channel at this point in time. And let me just take a look at the Euro USD here. We do have a couple of stronger levels. We have a level where we might consider what we would call a premium zone there, which is at about 1.1350 to 1.1355. So about this area there, that's your premium zone for the Euro USD, and the discount zone that we have here, or where you think people might look at that and say, oh, it's a cheap price. It is actually located at 1.1325, just about this area here. So this are the current range. So if you want to straddle this, then this are the range that needs to be broken. I don't really want to straddle this, so I'm not really in a hurry to kind of position myself in anything or whatnot, right? Because we're going to be fading the initial move, and we need to act very quickly. If I say, we'll start buying, we'll just trigger it on market price. But ideally, once after the liquidity kind of dry up a little bit, then we'll do it. Okay. So we still have a good 3 minutes to, just let me explain things to you. All right, this is the dollar yen on the hourly time frame. If you take a look at the daily time frame, obviously we have that resistance trend line capping down the market. So this is probably going to be limited in terms of how far up it can go. We are already at a little bit of an exhaustion here. Let me just take a look at the dollar yen that we have here. Is that the premium itself is going to be about 144.80, which is really high up there. Am I looking at it? Yeah, 144.80. It's not that high. It's basically just about here. We're basically going to be looking at that as a potential premium level. Now, if you guys are wondering what a premium level is, if market goes up there, it fails, then yeah, people will sell at about those levels there. And the discount level, we're actually very close to that discount level. We might actually trigger that discount level, which is about here. And to be exact, let me get it. It's 144.30. Yeah, about this area here. That's basically the discount level on the dollar Japanese yen. All right, a lot of you guys are probably asking, okay, what should I do with gold? Should I be looking at stuff like that? We are actually at a premium level, and that's about 3,270. Yeah, about 3,270 to 3,272. So I'll zoom in a little bit. So this area here is actually the discount level. It's a premium level. This point in time, discount level is actually pretty low. On gold, it's at about 3,200. So if you want to trade, then you trade inside this range, and I think this is a reasonable range to trade. But yeah, that's your premium, that's your discount. And obviously, if you take a look at the equilibrium on the whole thing, it's actually about 3,240 on gold, which is about there. All right, so I'll update you on this one here. But yeah, apart from all the currency majors, the other thing that is going to move a lot is actually the equity market. But we'll see what happens here. All right. Good drills. I just told you guys, right? We'll wait. Don't short it. We'll wait. We'll react to the data. If we can fade it, we'll fade it. If there's no fade, then we'll take the trade. But yeah, no rush. Why do you want to gamble your account before the data is actually released? You can't be that old. I'm super old. You guys. All right, data just got released. Everything is just starting to spike at this point. So just calm down a little bit. We'll fade it. Don't worry about it, right? And gold, it's not really going anywhere. I think the biggest drop is. Let me just look at the numbers. I'm so focused on this, I didn't even check the numbers. The NFP number is 177,000. Previous number was revised down to 185,000. I think that's a good number. The unemployment rate unchanged at 4.2%. Average hourly earnings was down 0.2%. And we'll see. We might fade, and we'll see. Hopefully, we'll get a little bit of confirmation right now. The dollar Japanese yen, I believe it's at the premium at this level. If it doesn't surpass the premium, then yeah, we'll probably short it. Okay. I think we'll break, and we'll actually go long dollar yen at this point in time. We're gonna get out 145, 145.10. That's probably only gonna give us about 10 pips, and Stop loss, we are going to keep it tight. That's going to be at 144.75, about there. And this one we will go at 145.10. This is only going to give us a 1-to-1 risk reward ratio. Gold, we'll probably have to short gold. Looking at the current situation here, just really thinking if we should kind of go short on gold. Not getting. Just give me 1 second on gold. We might take gold, but I think I'll just wait a little bit on gold. All right, I think we were out on the Doi Yen, I believe. We got stopped out. It's okay, it's a small trade. I think we should be in a little bit of a fade at this point in time. We might fade this. I'll wait, no rush on this one. I'll wait. I'm not getting anything on the euro. I'm not getting anything on the sterling. Nasdaq also not really getting a lot. It kind of just rallied up as well with the Nasdaq and the US 30, but really we don't see a lot of price movement. Okay, we'll fade this. I'm just not getting that fade happening now. Hopefully we'll get one soon. All right, the audience still remains in that premium discount zone, which is problematic because it's going to be really hard for us to fade on this. I don't see a lot of reactions, in all honesty, on the currency market here. We did see that drop on the sterling there. Still very well supported though, so it doesn't really clear off anything. Euro USD also, I think we broke that, but we'll try to fade this, but not showing any signs of confirmation for a fade yet. Might go short gold, but I don't have a lot of confirmation on gold. Yeah, I think we can probably go short gold right now, but your stop loss, it's going to be beyond the premium at this point in time. It's going to be at 3,275. About there, and we're going to be getting out at about 3,240. Hopefully, yeah, about there, just right at the kind of equilibrium. All right, we'll keep gold for now, but yeah, no matter where you get it, you try to get it as close to the premium level as if you can, which is about 3,270. Ideally, that would be the level you should be getting in, but I'm just not getting the opportunity for a fade. In fact, we're actually getting negative volumes building up on gold at this point in time. Dollar yen, we might actually attempt another long on dollar yen, but I want to see we break above that premium first. If not, we move closer to the discount level, a little bit lower, and I would actually do a buy limit about 144.50 if you want to. You can do a buy limit at 144.50, and your stop loss, if you do that buy limit at 144.50, your stop loss is going to be below 144.25, and I'll put it about 144.20. So you're risking about 30 pips, and what you're trying to aim here for the Dow Japanese yen is that we're not really going to go all nuts on the Dow Japanese yen. Max you'll go for is 145.25 for intraday trades. Remember, this is Friday. We want to fade it. So are we going to expect a weaker USD? Again, I don't think we're going to be looking at a weaker USD, right? Reason being is the unemployment rate is stable and we do get a positive NFP numbers. the other thing that I keep mentioning to you guys is that it's irrelevant at this point in time because we're looking at old datas. Um, so yeah, I don't think it will actually have a lot of impact in the market. Maybe a short term, it'll create a little bit of a positive noise in the market. But whether or not this is like the turning point for a stronger US dollar or weaker US dollar, this is not going to answer any of that at all, right? It's just not going to answer any of that at all. At this point in time, people are just going to be thinking, okay, we look at the negative GDP numbers, but we got positive NFP numbers. And the reason why I say this is kind of all smokes and mirrors, right? Because remember that Elon Musk Doge is cutting a lot of government jobs. This government jobs cutoff doesn't actually take into effect. I think a lot of them actually is actually taking effect this month, and so we will actually get the real employment numbers next month. This point in time. All right, market is really choppy this point in time. I would still go long on the dollar yen soon, but I'll let you know. But if you do want to have your buy stop, do it at the 141.50 level. So yeah, we're jumping in onto the 1 minute time frame, which is something that I'm not really too. I don't like it, but at this point in time, this is how I've been trading for the past April. Otherwise, we miss a lot of opportunities. There's just a lot of noise in the market that is actually tradable for once, and we have huge volatility. This is not where the money is, in all honesty. And if you guys are familiar with what's going on in the U.S. stock market, this is where you should actually be trading. It's actually not the currency market. It's actually the stock market. If you take a look at the range here on the Nasdaq, look at that jump on Nasdaq. How many points is that? That's a lot of points. We are looking at about 200 points on the Dow Jones, and the Nasdaq, same thing as well. Okay, what am I getting here? I actually had actually it's 7. There was actually a range breakout that was actually possible on the Dow before this, but yeah, we just had a little bit of liquidity grab at a premium, which is also very close to the previous day high on the US 30, right? So if you take a look at the US 30 and you take a look at yesterday's high, where it is right now, we're basically around that high right about now on the US 30. So there will be some profit taking here. We also had a little bit of a liquidity grab. If you take a look at it on the 1 minute time frame, it's actually pretty noticeable that there's that liquidity grab. I'm still sticking on to the gold trade. That's fine. Just a little bit of a noise here. The euro, I'm just looking for once the market fade, then we'll try to position ourselves. The sterling is trying to kind of climb back a little bit. I think the sterling here is gaining back a lot of that losses just now. And dollar yen is at 144.50. We are at the limit, and I'll give you an update in 1 minute whether or not we can go for long on the dollar Japanese yen. But if you already had your buy stop triggered, your buy limit triggered, then that's fine to skip it. We'll probably do some stop loss adjustments at this point in time. We're not adjusting. It's going to be at 144.20. Just give it a little bit more distance. It's calmed down a little bit. Probability for a rate cut high? No. I don't think a probability for a rate cut is high, but I think market is pricing in for 80% cut this May. I don't think we're going to be looking at that. I don't think Jay Powell is that stupid. And look, as I said, if we have the unemployment rate shooting up really high, about 4.5%, then yeah, that will happen. With the current number, the NFP is that high. In a previous month's revision, 235 revised down to 285,000 is still a high number. I don't think that we are, gonna be in a really bad situation there. All right. This is on the sterling. I think we can start going long on the sterling here, pending a potential breakout. But let's see what's going on here. All right, we'll go long on sterling. Very tight stop loss. We don't want to risk too much, right? And my stop loss is going to be at 1.3270. It's supposed to be about 75, but I'll leave it a little bit there at 70, and we are going to be aiming at 1.330. Not going to give you a good risk reward ratio unless we adjust the risk, but it is what it is. There's a little bit of an order block building up top. Probably can push it up a little bit higher. That's going to be about 1.3305. Not worth it. We'll go 1.3304. That's completely fine. Stop loss, I think we can trail the stop loss now. 1.3273. No, that's fine. If I move it too quickly right now, we might see the market snap at it. We'll see. But yeah, no, I'll leave it there, and we might do some take profit adjustments. So this is temporary at this point in time. Yeah, everything else I'm not getting anything. Dollar yen is cheap, and I'm not sure if I want to get in on that level there. It is at a little bit of a discount. In fact, no. Dollar yen it's probably turning negative. I'll hang on to dollar yen. Euro USD, we can also go long on Euro USD. Tight stop loss, right? Tight stop loss here. What are we looking at in terms of risk? Not a lot. 1.1320. Just below that area there. And we'll be aiming for 1.34 to 1.3445, which is about here. That's okay. That's a reasonable risk reward ratio. That's fine. We'll take that. No changes on gold trade as of yet. Why do I keep getting negative volumes on dollar Japanese yen? Is dollar Japanese yen gonna weaken? We're 15 minutes in, and I'll see what the number is. If you have a dollar Japanese yen trade, you might want to cancel that long. You're risking about 12 pips. Just I would say cut it off, and we'll go reverse on dollar Japanese yen. Let me just see if I can get that. It's very choppy at this point in time, but we'll see. All right, I just went short on the dollar Japanese yen. My stop loss is going to be at 140. It's really pushy. It's very choppy at this point in time. 140, 144.70 at best. That's how much I'll go for. And I can't take a lot out of this anyway. I can only take it at that discount. It's actually less than 1-to-1 risk reward ratio. It's balancing out. Numbers should point for a stronger dollar at this point in time, but I don't know what the market reaction is. As I said, it's not that we want to focus on the equity market much, but if you see what's going on in the world, I think a lot of the triggers, a lot of sentiment revolves around what's going on with the equity sell-off there. We would consider that a potential crash. And that's the reason why everyone is just trading on the equities a lot more in April compared to FX. All right. So if you want to follow where the money is, The money is not in FX; it's actually in the indices. This one in time, you can trade the Japanese 225, German, Nasdaq, Dow Jones, completely up to you on those. Right. Well, I'm actually pretty surprised someone's asking me about Bitcoin, but yeah, it's completely fine. Oil, please do not touch oil at this point in time. All right. Dow 30 and Nasdaq still positive. If you have a long position on those, we are at a little bit of an extreme at this point in time. Very close to premium level, very close to critical level. Nasdaq is very close to 20K. The US 30 is at about 41,000. This is at a level where, I'm not really sure if it actually is sustainable or not. It's time for a sell. Buy side liquidity has been grabbed. On the US 30, yes, I noted that as well. The buy side liquidity has been grabbed. But it's not strong at all. In terms of the buy side liquidity that was actually grabbed on the US 30, right? The volume is actually very small. If we measure the volume on a 50-minute scale, it's only about 15.7. That's about 8%. Even if we take a look at it on the hourly time frame, we haven't had a liquidity grab at this point in time, but we are at that order block and very close to that previous day high. It's I would say one thing is it's that we are actually in the middle of a fair value gap on the daily time frame, especially on the US 30. Right, I think positions just got being closed out on some of the stuff here. I think Euro got stopped out and Dow Yen Dow Yen short got stopped out. But if you had that Dow Yen long, keep it. It's fine. Gold's coming down really quickly as well. Sterling is the only one that's currently okay. It's holding, it's transitioning, but I'm not sure for how long on the Dow Japanese Yen. But I'm very happy to keep my gold short. But just keep in mind, gold short, it's not going to be like something you hold on for a very long period of time. All right, guys. Not really getting a good fade, and I think there's a lot more choppiness rather than anything else at this point in time. And range-wise, we're not really moving out a lot, and you can see that grab that happens here on the sterling there. Just now, but that's basically where we want to place our stop loss on the sterling. I'm still okay with the sterling. The euro, we got that. It does spike down a little bit. I think we placed our stop loss too close, but that's okay. At this point in time, I don't want to risk too much because if we take a look at the 15 minutes, everyone might be thinking, oh yeah, it's long, with this, it's long that. If you take a look on the whole thing on the hourly time frame, sure, we might have a little bit of a change of character developing here. But whether or not we have a break of structure, we don't know, right? So at this point in time, sure, you got your change of character. That's completely fine. Market is pulling back down on one condition that, we have a support trend line that's not broken, and a change of character without a continued break of structure, this is okay. That pullback is completely fine. If it bounces off those levels, that's fine, but we need a break of structure, otherwise we're not going to be able to trade that. And for that break of structure to happen, it has to take out the premium level on the euro, right? So I wouldn't be in a rush or anything like that. You want to go long right now, you can go long. Just I don't really want to have a huge stop loss on the euro. Okay. All right. We're about 9 minutes in. A couple of positions still running here. I will leave the sterling there for a buy. No adjustments to the stop loss and whatnot. And for gold, yeah, I would still keep it at that particular price level there. And let me see if we get anything else that we can keep for the long run. I don't think we're gonna get anything else. I keep getting conflicting readings on the Dow Japanese Yen, and in all honesty, the longer term point of view for this one is that it should still point to the downside for Dow Yen. But dollar yen is a little bit unique because I think in the past hour we had two liquidity grabs on the dollar Japanese yen. One major liquidity grab on the dollar Japanese yen on the 15 minutes time frame, and I'm not getting any changes on the reading here. That I'm still getting a negative reading on the dollar Japanese yen. But yeah, clearly up to you guys. What do you want to do with it? I would actually avoid the dollar Japanese yen. I don't think it's actually worth taking at this point in time. So I would leave it with gold and sterling. The euro, it's tough with the euro. I think it's still gonna be more or less a strong bullish run. If you do want to go long on the euro, you can have your stop loss here, and then it will be more or less a trade that you're going to have to leave running for maybe the whole night. Might get dragged on until tomorrow. But I think this is at the level where we could go. This is more on the longer term positioning. Your stop loss would actually be the nearest one is actually going to be at 1.1280, about there. Right, I think this is far enough. I think this is safe enough because if it clears off this area here, then it might break even lower. So we'll leave it at that. Your take profit for the euro, obviously, we got to look at a couple of stuff here, but we do have a pretty strong order block building up at 1.1365. That's going to be your first resistance there. This is not going to give you a good risk reward ratio, in all honesty, with you guys here. So yeah, you can go for a little bit higher. I would go with the 1.1384, but very close to 1.14, so I'll just aim for that 1.14. This is going to give you about 1-to-1 risk reward ratio. It's actually not a lot at all. If you take a look at the positionings that we have here, that's only about 60 pips. We're risking about, at the same time, about 50 pips here. But yeah, these are the only trades that I can see at this point in time. Everything else is still pretty choppy. There's a lot of noise, and one of a few reasons. Obviously, we're not going to get a lot of price movement on the US 30 until the US market is open anyway, and then we'll see crazy volatility. That will happen in 25 minutes. If you're thinking of a trade on the US 30, then I would wait until that happens. At this point in time, I'm just not getting anything. That liquidity grab that we saw, that wasn't strong enough. This is still punching through higher. US 30 is gaining. Nasdaq is also gaining. Obviously, there's a lot of positivity on the earnings, on the back of Microsoft earnings here. But yes, we are approaching very critical levels here. We are approaching that 20,000 level. No indication of any liquidity grab as of yet, but if you're asking if there's another block building up there, daily order blocks, yes, we got one, but other than that, you actually don't have a lot. You have a daily order block up there, very strong daily order block. That's huge though. It's between 20,000 to 20,400. That's the order block that we're looking at on the Nasdaq. So we're basically looking at that area here. This is the area. Very strong order block, and if it fails today, then yeah, it'll set up the tone for next week. But that's the stock market. That's the kind of the glimpse on the stock market that we have here. Dollar yen, I'm a little bit conflicted, in all honesty, because I still get signs that this could actually weaken further, but very choppy on the dollar Japanese yen. Same thing on the Euro USD, Pound USD, also very choppy on the Pound USD here. Let's see if we get any contrarians because we're approaching the last 3 minutes here. If there's any changes on the volumes in the short term, I'll let you know. But so far, sterling is still okay. The euro is still okay, and gold. We just got another possible short. We had a shift in negative sentiment building up again on gold at this point in time. So it's up to you. What do you want to do with gold? You can add another position for gold there, but it's a little bit risky. I would just stick with one. That's fine. All right. Last 2 minutes. If there's no other request, then yeah, I'll leave it with whatever we have here. We got a long sterling, we've got a long euro, we've got a short on gold, and I would keep it as it is. And you can see how everything is just neutralizing itself. Again, the euro and the sterling here. I think the euro, you probably have to keep it as a potential swing if it doesn't go anywhere. But the sterling should be an intraday trade, and for gold, it should be an intraday trade as well. If you want to tighten your stop loss for gold, you can tighten it to 32.60 if you want. But because we have our stop loss at 32.75, I don't think it's even worth adjusting. Stop loss on the sterling is probably going to get hit anytime soon. Again, we're not really losing more than 20 pips per trade anyway. So euro and gold, I think this is a trade that would probably last a little bit longer, but the sterling there, I think we're looking at a lot of choppiness in the market at this point in time. Probably going to get our stop loss hit there, but I'm not adjusting. Okay. All right. So again, this is the code at Nonfarm 2025. So save the code if you want to use the code. And what's next for this one here? Well, we have a Q&A session, but you guys know me. You can just always ask me what's going on if you want to ask about anything. Our next session is actually going to be on the 8th of May. That's going to be next Thursday, and this is going to be our news theory. And because we're dealing with a lot of macro changes, you might actually do just a special coverage, a little bit of an update onto the whole macros there. But the whole idea is basically just for you guys to be a lot more familiar in terms of using how to straddle the market. But I think things are a little bit different, and I don't think we're going to be straddling the market anytime soon. But yeah, if you want to know more about limit orders, then yeah, come into next session. If you want to follow up or you want to get your update on the whole macro situation, then yeah, we'll do that on the news theory session, which is going to be on the 8th of May 2025, which is next Thursday, same time, same place. All right. Cool. Any questions? No? All right, then. Well, if there are no other questions, we'll probably just wrap it up very soon. Gold trade is going great. We'll just let it run a little bit. You can start adjusting your stop loss to you can start adjusting your stop loss to 32.57 if you want to, but I'll leave it at 75. Not really in a rush. And if you want to get out early right now, you might want to get out in about $2, right? About 3,245 you should be getting out if you want to be done for today. I think the short-term trade there's a little bit of a there's a little bit of a discount level building up at about 3,245. So yeah, if you want to get out, now is the time to get out on gold if you want to. But yeah, feel free. You can let it run if you want to. You can move your stop loss break even, let it run. But if you want to secure a profit, you should be getting out right now on gold. Okay? All right, guys. Let's wrap it up. Let's end it for tonight. And I'll see you guys next week. Good luck with your trades. Stay safe. Have a very fantastic weekend. You go. Some of you guys are probably going to go into the elections tomorrow. If you guys are in Singapore or Australia, yeah, elections. All right, guys. Stay safe. Have a fantastic weekend ahead. See you soon.